Hey everyone, it is Friday, just a little afternoon. We're going to close up shop early today, so we're going to want to do an update on gold, since we haven't done one in a while. We talk about gold every day with traders, but we haven't done an update, and the stock market's not doing much since the last update, so we'll cover this. On the long-term chart, going back to September 2011, we counted the entire rally as a cycle degree 1. And there's a couple of reasons, several reasons actually for doing that, but the entire rally counted as 5 waves. We've been trading gold since the mid-80s and tracking it through that whole time. It counts as 5 waves. It took a few decades since gold futures started trading. That's too long to be intermediate or even primary. So since it's decades, it has to be a cycle. In our opinion, it's not long enough to be super cycle, so this is why we give it cycle degree. Nobody really knows, but that's how we come to the conclusion that it's a cycle degree. And from that all-time high in the futures at current contract month in September 2011, 2021, 60 was the high. And the market started the reversal. Intermediate wave 1 down. Wave 2 got a little complex. 2 up, 3 down, and a 4th wave triangle, and a diagonal 5th wave. And at the time we were following this, in the contract months that we're trading at the time, one thing that's pretty unique, this 5-wave decline followed Elliott's guidelines for a 5-wave impulse pattern as pretty as you'll ever see, meaning that wave 2 achieved a 61.8% retracement of 1, and that should say 2 right there, not 3, which was good. Wave 3 down, intermediate wave 3 down, hit the 1.618% of 1, and then this did a nice triangle for wave 4, and it achieved 38.2% of wave 3, and this should say wave 3, not 1. And then the diagonal 5-wave pattern down to complete that 5 waves achieved 1.786% of 1. So this is really a pretty 5-wave decline. And since it is 5 waves, in our opinion, it can't be all of a correction of the cycle degree 1 that ended up here. So we have to be in a 3-wave correction since December 2015. And we originally, going back 2 or 3 years, we had this as A, and then we had this as B, but this all strung out, took forever. Then we had this as C, and just recently we had this as 5 waves up, 1, 2, 3, 4, 5, to finish C, and to finish the correction. And we got a big 5-wave reversal down from there, and now then, as you can see, we've rallied up, made a new high, so that changes the structure a little bit. So now then, we've labeled this as W, this is X, and this is Y. And so the market's doing a double zigzag, almost like the stock markets are doing, in our opinion, only it's taken a long time, since December 2015, to complete this. Anyway, in our opinion, this is how it's counting, how gold is counting. And once this is complete, it might we could make new highs right here, and I'll show you why on the short-term chart in another page. But once this is all complete, we look for gold price to go down for wave C, for primary wave C, to complete a cycle wave 2. And this could be one of the targets. If we go back here, the chart doesn't show it, but we go back to the primary degree fourth wave way back here in October of 2008, and then 5 waves up for primary 5 of cycle 1. But that low was at 750 in October of 2008 for primary 4. That would be your next fourth wave of the lesser degree at 750. That would be the target. Of course, if we're right and this move down starts, we'll have a lot of other ways to make those calculations, but one target would be the previous fourth wave of the lesser degree, and that's where it sits. Now, if you're bullish and we get charts sent to us, and we actually see where traders are counting this as 3 waves down. This whole decline is 3 waves down. This is a 1 wave up. This is a 2 wave. And this is the start. This is just 1 of 3. Starting a massive move in gold. And that's what we're hearing on the media a lot. A lot of historical work has been done on gold, and people think that gold goes in the opposite direction of the stock market. That's not true. People think that gold goes up during inflation. That's not even true. Sometimes, but not all times. So we feel like that this move down in gold will coincide right along with what we see happening in the stock market. So this is how the long-term chart, in our opinion, plays out. And now let's look at over here at the here's a short-term chart on gold, and you can see how wave Y has played out in 5 waves. Wave 3 right here, minute wave 3 was 1.618 times 1. Then the fourth wave, 5 waves up for A and B down, and we completed 5 waves up actually to this point right here. But the problem is now is this really looks like a fourth wave triangle. Counts really well as a fourth wave triangle. So wave C could be forming a diagonal, wave C of Y. And we haven't made a new high yet. We did get a thrust up out of the triangle, but it failed to make a new high. We've only done 3 waves down, so that looks like it could be a 1 and a 2. We'd start up in 5 waves or 3 waves if it's a diagonal for the 5th wave. And that would count as 1 up, 2 down, 3 up, ABC 4th wave, and now the 5th wave up, complete C, the second zigzag, C of Y, like we showed on the longer term time frame. But until we make a new high, this could be the top right here as C, and this could all be a complex 1 and 2 like the long-term chart did. So we'll have to see how this plays out, but this is what if we do make new highs, this is how we'll count it. So that's it for gold. That's what we'll be watching. As soon as we make a new high or we break down below this 4th wave, we'll come back and do another update and see how it's looking. Everybody have a great holiday weekend. Stay safe. Happy trading. We'll be back next week.